Nigeria's inflation rate drops to 22.97% in May 2025, down from 23.71% in April. According to the National Bureau of Statistics, this marks the second consecutive month of decline, signaling potential relief for consumers and policymakers as efforts to stabilize the economy begins to show early signs of impact. The report also shows that food inflation, a key driver of headline rates, stood at 21.14% year-on-year in May, compared to 21.26% the previous month. Experts attribute the decline to stabilization of the macroeconomic environment, a drop in fuel prices, and reduced food costs. Last month, the central bank held its key rates for a second consecutive time, following 6 hikes last year, citing improved macroeconomic indicators, supporting medium-term price moderation. Well, joining me is the head research and Toria Assets Management, Oreoluwa Odetunde. Oreoluwa, thank you so much for coming in.
Thank you for having me.
And it's the first time on the show. Thank you for coming in. It's really good to see you. Let me ask you what you were expecting before the inflation figures came up.
No, I think generally analysts' forecast, as well as mine, we had definitely expected to see a deceleration in inflation. I mean, if you take a look at the fact that you had also rightly mentioned that, we started to see PMS prices trend downwards. And I think there was some sort of price adjustment done by Dangote, about a 1% slight, decline in PMS. So that translated to lower transport cost. Apart from that, we also saw relative stability in the FX environment as well. So we even did see a slight appreciation in the Naira compared to USD. I think about 1%. So I think all of those factors together, that was what led to the lower inflation figure that we saw. And you'd also see that in terms of core inflation as well, core inflation also made its way down. Month-on-month basis, I think that figure came to around 1.14%, and then compared to 1.34% it was in the previous month in April. And simultaneously, its year-on-year core inflation figure also declined as well. So it's clear that underlying there's an underlying decline in terms of the real inflation basket. But when we now took a look at food inflation, I think that was where the major issues were. We saw a bit of conflicting data, so to say. So we saw that, in terms of commodity, we saw that commodity prices were a little bit softer. Let me just say that, we've seen that globally commodity prices started to come downwards. And, last year we had a lot of disruptions from, the Russian-Ukraine crisis as well. And we are seeing a situation where demand is now weaker for commodities and supply has more or less stabilized. So that in some way made food inflation on a year-on-year basis, come down a bit more lower. But we saw that in terms of month-on-month inflation, that was where we had a bit of conflicting figures. I think month-on-month inflation went up to around 2.16%. And I think that was the highest increase we've seen since January 2025. So we are definitely seeing some pressure in terms of the food basket.
That looks pretty good. But would you say, if we are to have a chart or a graph, would you say that we've gotten to that point where inflation will now start to taper down?
So I would say, yes, that was what we were expecting, but I think we're starting to see a bit of temporary price shocks happen. First and foremost, we know that during this period, there tends to be planting, there's a planting cycle that happens for our key staples. So that, reduces, farm produce output. And when you also looked at the inflation data for May 2025, you see that on a month-on-month basis, farm produce index actually increased by over 20%. We only saw a growth of less than 1% in April. So definitely we expect to see that pressure continue. And now we're seeing, escalation of tensions between, in the Middle East, between Iran as well as Israel. And, most likely the US is, saying that it's most likely going to get involved in this. So should we see more escalation on that end? That has started to affect oil prices, and that will continue to happen. I think last week on a week basis, we saw oil prices increase by about 11%. So that's very significant, especially for us that we are trying to look to stabilize our PMS prices as well as AGO prices. So we think that those seasonal factors is what is most likely to cause, some short-term, increases in inflation generally this year.
I'm looking at that stability, and let's look at the war in the Middle East, like you mentioned, Iran, Israel. If that continues, my fear is this. If we see this spike in the price of crude, we're expecting the Federal Reserve to come up with their figures anytime from now, and we're already tightening in Nigeria. I'm saying that the CBN might continue to tighten even if we get the petrodollar in, we might have some exported inflation. I'm sorry, imported inflation. You don't think that will happen?
I don't think so. I think that a lot of imported inflation index largely depends on the stability in the FX environment. So when we also looked at the data for May 2025, you'd see that there was actually a negative growth recorded in May 2025, about 1.45%. Yes. So you see that it's largely dependent on the movement in FX. But I think the important thing to note is that, when we're seeing these escalations happen, foreign investors, and we know that it's mostly foreign portfolio investors, which is, hot money. They tend to leave when they're... Exactly. They
just move the money very fast. I always say it's a pop, very fast money.
Exactly. So, I mean, if you do see another, exit, we saw an exodus of them happen when that Liberation Day, event happened in April. So I think if we see a repeat of escalations, we might start to see foreign portfolio investors taking out their funds again, and that would definitely affect the FX environment and invariably affect inflation too.
Let's look at food, which you touched on. That's what many Nigerians would like to hear about food prices. Many will still not agree that the price of food is really as, maybe the reduction, the kind of reduction they expect. Now, my question really would be, what can be done at this time, to help address this issue of food insecurity one way or the other?
I mean, apart from the fact that we know that there's a lot of infrastructural deficiencies in the economy that still has to be sorted, and we still need to see a bit more credit expansion towards the agricultural and industrial sector. So if you take a look at the money supply data that we saw that in terms of credit to the private sector and credit to the public sector as well, we saw a year-to-date decline of around 3 to 5% range. So it still definitely shows that there's some cautiousness in financial institutions giving out some of this credit to the real sector. And you know that recently there were, some announcements around regulatory forbearances for banks.
True. Exactly.
So it means that definitely a lot of banks will be looking to regularize their books, and definitely they'll be looking to be more cautious about expanding their loan book. So most likely the guys who will be able to get most of the funds from them will people who have large collaterals, people who they're well comfortable with, and in terms of their credit ratios are still quite significant. So we expect that the real sector would still continue to face this lack of credit facilities. We know that farmers as well, in terms of how they use some of these facilities, they still depend on, really primary, there's still a lot of subsistence farming being done. So we haven't seen that, significant advancement in farming in Nigeria, definitely. So I think if we continue to see that, inflation starts to slow, we think that, as of Q3, Q4 period, when, the harvest season kicks in, we might start to see that, the central bank might respond with most likely a rate cut. So should that happen, we might start to see maybe a bit more credit into the real sector.
Are you thinking about, I'm not talking about the anchor borrower scheme now, but are you thinking that there's needed intervention from the Apex Bank? We know that they've tried to stay with stabilizing price, and all of that. You're already shaking your head. You don't expect any intervention anymore.
I think at this point in time, their notion or their trajectory is very clear. It's clear that they want to make sure that, system liquidity is still very tight. And if you look at the last, I think over what we've seen yet on a year-to-date basis is that system liquidity has been actually very high. We've had very high OMO issuances last year as well as treasury bills. So that's translating to a lot of maturities in the system as well. And we're seeing that there's increased FAC coming into the states, which the states are now placing into the banking system. That has influenced the banking system liquidity. So there's already a lot of system liquidity. A lot of banks are not giving out all of this liquidity as loans to the real sector or to some individuals as well. So I think at this point in time, they will still want to tighten. They'll still want to keep that very tight monetary policy stance. And we know that in terms of fiscal policy, there still tends to be a lot of leakages that's happening. So fiscal policy tends to be, very expansionary. So if monetary policy starts being expansionary without seeing a price stability happen, you see that inflation would, start to accelerate once more, which is not what they want. And as much as possible, we know that, they're trying to also bring down market yields. We've seen that market yields have actually been making a decline from last year, where we saw treasury bill yields as high as 24%. Now I think they've dropped around 20%, 19%. I think we have an auction today as well. We do expect expect that Treasury bill yield to start to come down. But I think that, you know, the central bank has always found a balance between keeping monetary policy rates either high or low, and, you know, keeping market yields a bit different from that. So I think they can maintain that 27.5%, and Treasury bills yields and, you know, bonds yields will still remain around 19 to 20% levels.
Just a minute now, let's tell you that President Bola Tinubu is in Makurdi, the Benue State capital, to commiserate with the government and the people of Yewata and the Guma local government area, as well as address security challenges facing the state. The president's aircraft touched down at Makurdi Airport, located at the Tactical Air Command Nigeria Air Force Base, Makurdi, at about 12:58 p.m. He was received by Governor Hyacinth Alia, the Secretary to the State Government, Secretary to the Government of the Federation, George Akume, Governors of Plateau, Nasarawa, Kogi, Ondo, and Kwara States. At the moment, President Tinubu visited the victims of Yewata attack, where they are receiving treatment at a hospital, and is also expected to meet with major stakeholders in the state in view of the violent attacks that have led to the loss of lives. And we are staying with the president's visit, and we'll bring you updates as soon as we have them. All right, then. We'll stay with that. Just like we said, I still have my guest with me live in the studio, and we are going to continue with our conversation talking about the inflation figures. Oroluwa Odetunde is here. Oroluwa, you talked on the fiscal side, and my next question will come from that angle. You know, I always like to talk about that when I have analysts like you in the studio. Do you see that handshake? Do you think we are having that proper, now let me not say just the handshake now, the proper handshake that is expected from both parties, you know, to help us achieve the needed kind of inclusive growth that we need in this country? Yeah, I think,
so clearly the rate as to which MPR is, 27.5%, is restrictive. Yes. But it's needed to achieve price stability. That's one thing that is for sure. And I think what we would need to see, more in terms of fiscal policy, in terms of tightening fiscal policy. I think that the monetary policy is doing a lot, but you know it can't do more than this. It can't continue to increase interest rates in order to bring down prices of things in general. And you see that underlying inflation, underlying prices have actually started coming lower. Yeah. So it's not necessarily, so most of the factors that is what's really driving inflation is really around food. And we've seen that, during the announcements, during the meetings that we've had, the Monetary Policy Committee meetings, they have been citing, speaking to the fiscal policy that there's so much that needs to be done in terms of, increasing our security apparatus and all of those kind of things. So I think we still just need to see more from the fiscal administration. I think there's so much that the Monetary Policy Committee or the monetary policy in general can do in order to bring down inflation.
So we've seen that stability in the FX market. We've seen that stability, of course, in other aspects of Nigerian economy. But do you think that this would affect the next MPC meeting? Would it shape in any? Very quick. You're very quick to say no. You think we still hold rates, right?
Yes. So I think the body language of this particular central bank governor, and you'd also see the members, it's very clear they want to see a consistent decline in inflation before they can start to introduce any rate cuts. We've seen 2 consecutive declines in inflation. We need to probably see more. And I think due to some of these temporary shocks that, is currently happening, the escalation of, the wars, then, flooding in Niger State, as well as the unfortunate events that we've seen in Benue State, all of this is most likely to bring about some level of inflation. So, and I think we will start to see those events start to, translate into higher food prices in June and July as well, and the planting season as well will also bring about pressure on the food index. So I think that when we see the headline inflation data, it might appear higher, but I think one thing that MBS has had going for it in a while is that the weighting on food has actually declined to around 40% levels, and we had a very high base last year in 2024. So when you do that year-on-year comparison, that inflation still looks manageable to an extent, but I think they will still need to see a consistent decline in headline inflation year-on-year, as well as month-on-month, the month-on-month figures. I think that, if they want to look at inflation, I think maybe what might lead them to, start to maybe cut interest rates maybe in their next meeting is that if they don't want to look at inflation on an average basis. We know that that's how the European Central Bank is currently looking at inflation. It's not looking at inflation on a monthly basis. It's not, thinking, it's not having it's not allowing the temporary price shocks have an effect to, some of its decision. And, the ECB has already cut about 3-4 times this year as well, and we expect another cut should happen at its next meeting as well. So if Nigeria probably moves in line in looking at the average inflation, which has been moving, lower, I think it was around 33% at the end of December 2024. That has made its way down to around 26%. So maybe they might most likely introduce a cut. And in terms of, and if maybe they are focusing on core inflation as well, we've also seen that core inflation has maintained that downward trend. So maybe if they look at inflation from that angle, they might likely introduce a cut, but I don't think so. Their body language says they want to see a consistent decline in inflation before any cut happens.
Finally, before we I let you go, we've seen some interesting figures, I must say, from the Apex Bank, just like our net reserves looking pretty well than what we used to have. At the point it was scary, you would agree with me. And, but now looking pretty well. You'd also alluded to the fact that there's been stability with our FX, at least that disparity we used to talk about is better than a bit predictable, though we have the hot guys coming with the money and running. But in your general overview, what do you think about the outlook of Nigeria's economy, considering the reforms? It's no more news, subsidy removal, liberalization of the foreign exchange market, but the outlook is what so many people don't understand. Some say it's pretty, it's gloomy, some say no, it's bleak, some say no, there's going to be light at the end of the tunnel. Well, you should, with what you've seen, with the figures we're walking around with, what do you think?
I think, for me, the outlook is really positive as of now. I mean, I think you would look at a leading indicator of the economy, and one would be the stock market. And you've seen how impressively the stock market has performed. We're seeing that, before we saw this regulatory forbearance, about banks being announced, the market was
are you worried about that?
Yes, not really. Because, yes, I mean, if you look at the minimum capital requirements of the banks, you'd see that we're not just using the global Basel III standards anymore. It's a bit more stringent. We see that the central bank always tries to keep banks in line. Their credit, the capital adequacy ratio is above 15%. In terms of their non-performing loans as well, it's expected to be below 5%. And I think a lot of banks have done impressively well in, keeping that rate at those levels. I think it's just been the exception of, First Bank, who has said that its NPLs is around 11%. But we're seeing that, they've released a statement and they're trying to regularize all of those factors. So I think that the outlook generally is positive. Like I said, the market has been doing well on a year-to-date basis. The market is up over 10%. You'd also see the growth that we've seen in cyclical sectors like the consumer goods sectors and industrial goods sectors. We know that those sectors have suffered in the last 2 years due to FX, due to FX crisis as well. Exactly. So I think, now that we're seeing that, all of those factors are now stabilizing. A lot of companies are now delivering profitabilities. More liquidity is going into the stock market as well. And we know that, fixed income yields have been coming downwards. So a lot of that liquidity is now flowing into the stock market, which is very positive. So it means that, when the economy is booming, risk assets too tend to move. And risk assets like, that of the stock prices, that's one thing that we tend to look at. So I think the outlook is very positive for the Nigerian economy, so to say. We've not seen the GDP figures for Q1. So we definitely, I mean, a rebasing might most likely happen. More sectors will now be captured into that figure. So most likely we might be seeing a growth of, say, 4 to 5%, which is, pretty strong. And I think one thing to also look at is, the foreign portfolio investors, and I'll just cite the stock market for instance. So I think before we had that Liberation Day announcement happen in April, in March, we did see that there was significant inflow from foreign portfolio investors, very significant. I think in terms of participation, it was over 16%. And the last time we saw those figures was in September 2019. So it just goes to show that apart from if we are doing everything right in terms of, keeping our FX stable, we might start to see, foreign portfolio investors. And they won't come in if your economy is not looking better. They will not come in. But, like I said, the escalations of the you know, the war, you know, most likely happening in the Middle East, that might just have a knock-on effect on, you know, foreign portfolio investors that are trying to make their way back into the economy.
Oroluwa Odetunde is head researcher at Korea Assets Management. Thank you so much for making it a date with us on Business Nigeria. We hope to see you again soon.
Yes, sure, definitely.
Thank you so much. All right, then I appreciate that.